I'm James Crabtree from the Lee Kuan Yew School of Public Policy here in Singapore, and it's my great pleasure to have the next 20 minutes of your time to talk to Augustin Carstens, General Manager of the Bank of International Settlements in Basel, and a man who strikes fear into the heart of the world's central bankers, given he's meant to coordinate all of their different policies. And so we're going to have a conversation this morning about the intersection of central banking and fintech. I mean, in a sense, you, in an audience like this, don't really need to have explained to you the opportunities that could come from the onset of fintech in banking, the end of universal banking, a far more competitive and consumer-friendly market in the end. But then if you're sitting there in a central bank, there are many risks that come with this as well. And so we're going to canter through everything from Libra and stablecoin to regulatory technology and supervisory technology. But Augustin, why don't you kick us off? In a sense, we're going to talk about some of the risks that this area comes with. But in a sense, what do you think is the opportunity, and how does BIS as an institution, how are you approaching the world of fintech?
Well, thank you very much. A real pleasure to be here. When they invited me to a Fireside chat in Singapore, I was surprised because I don't see the fire. And I think it should be more like a poolside chat next year. But in any case, I think that central banking really needs to facilitate innovation, facilitate the adoption of technology. Certainly, there are many important tasks that central banks need to do, which is to, more than anything, to provide a trusted fiat currency, to provide the adequate technology for financial services to be provided to society. But we need to realize that those financial services will be provided in a far better way, in a far more efficient way, if technology is incorporated into the scene in an effective way. And therefore, our challenge, and I would say our mandate, is to facilitate incorporation of technology into financial practices, but it has to be done in a prudent, adequate way. We need to move very fast, therefore there is no room for mistakes. There is no room for excessive risk-taking. Some risk-taking always is adequate, but therefore we need to strike the right balance, how we will move fast but safely.
Very good. Fast but safely. Well, let's leap in with, in a sense, the big topic at the moment, the elephant in the room, which is Libra. What is the BIS's view on Libra? This was announced to much fanfare. It's since suffered a series of reversals. There's a sense in which Libra has given the central banking community itself a bit of a kick up the backside in terms of coming up with its own digital currencies. But on Libra in particular, where in a sense has your thinking got on that as a project?
Well, the positive aspect of Libra is its boldness. It's the fact that, in this case, a group of people, private sector people, came up with the idea of bringing the world together through an effective payment systems. Now, the real issue is how to go about it. And it's not as simple as they thought. I think that's one of the key issues. I think a distraction in all this process is precisely for them to come up and try to replicate currency. I think Libra by itself is not needed. I mean, do we think that sovereign currencies is the problem? I would say no. I mean, we have a very well-working dollar, a very well-working Singapore dollar, a very good working euro, Japanese yen, and so on and so forth. We have solid institutions that are behind those currencies. We have payment systems, we have settlement systems that give finality, which is the essence for payments. Now, of course, if we want to bring financial services to a global dimension, I think technology is important, and many of the supporters of Libra can provide some of that technology. But I think here what is important is to have an adequate division of labor. I think that efforts like what Libra is behind should take advantage of what really is working, what is not a hindrance to the final goal, for example, to have efficient cross-border payments, to have reduced fees for remittances, and have an adequate, I would say, collaborative effort. So our sense is that there are many goals that the project of Libra is behind that are worthwhile to embrace and that is worthwhile for us to fight for. But we should, at the same time, use all what we have that doesn't need to be invented again. That's the bottom line.
But there's a pretty clear sense that you and your, maybe not you, but your central banking colleagues are suspicious of Libra itself. They're not sure this is the right model.
Well, again, the issue is the currency by itself. It's Libra. I mean, I think all what needs to be done in terms of having an efficient currency to be used in a global payment systems, I think that is where we have to focus. Now, do we really need a global currency for that? I would say no. We already are in a position, the technology is already there for the currency play not to be an issue. And
I mean, regardless of the model of Libra, I mean, do you agree with my sense that, in a sense, Facebook has done central banks a favor to the extent that until Libra came along, central banks weren't really looking at innovating in this area, and since it's come along, there's been a huge competitive threat, it appears, from the outside, and now lots of central banks are looking at central bank digital currencies, and there seems to have been a huge push to innovation. I mean, is that a fair way of reading what's going on?
Well, I would say, I would say three things about this issue. One, central banks have been thinking of central bank digital currencies for quite some time.
But they haven't been doing very much about it until Libra came along.
Well, we have been at the wholesale level. Okay. At the retail level, and that's point number two, it doesn't seem to be an urgent need for that. I mean, as a matter of fact, when people do, what people want, what all of you want, is to be able to do 24-hour, 24/7 payments in a seamless way, instant way. And are we there? Yes, we are there. At the final moment, even when we have central bank digital currency, will the user say, I will prefer this because it's CBDC or it's because it's efficient? And the bottom line is because it's efficient. Now, number three, yes, central banks need to upgrade its play on this, but we need to do it in a smart way. We need to do it in a safe way. And yes, Libra, from that point of view, was a wake-up call, and yes, there is more effort now being deployed to the development of central bank digital currencies.
And so what has BIS's attitude been to central banks that have been at the vanguard of this? So here in Asia, I'm thinking in particular of the central bank in China, which has been quite, on the front foot, thinking about issuing its own central bank digital currency. I mean, are you encouraging central banks in the region to experiment, to in a sense, move ahead and launch these products?
Well, of course, we are very respectful of each jurisdiction. Each one faces their own problems. Certainly, we are very supportive of the efforts of the PBOC. As a matter of fact, we're also learning a lot of what they are learning as they develop this. But each country has a different reality, and therefore each one needs to go at its own time. And again, I mean, there are countries, as we see here, we see many countries where the use of cash, for example, is falling very, very rapidly, but there are other countries where the use of cash is increasing. So, I mean, it's very difficult to generalize. What we need to do as central banks is to be ready. So if we're ready technologically speaking, we're ready from a logistical point of view, we're ready from a regulatory point of view, that's what we need. And therefore, if the need is there to move faster on CBDC, we will be able to do so.
And just thinking about this region, so many of the people in the audience are going to be from Asia. In a sense, central banks in Asia, and particularly emerging Asia, have to be very alive to this. I mean, Libra, for example, most of its customers are in countries like India, potential customers are in countries like India or Indonesia, and fintech may end up quite quickly becoming more systemically important in the financial systems of these large emerging markets as opposed to the Western markets. So is there a particular challenge for central banks in middle income and lower income economies here in Asia?
I mean, in a way, Asia is an example. I mean, I think many of the solutions, many of the objectives that the Libra type of projects want to achieve are already being achieved here. I mean, we have already examples at least at the national level where this is a reality. And I venture to say that very soon we will have cross-border experiences here in Asia that will do what Libra is promising to do, without the need of Libra. Now, what has been impressive here in Asia is the speed at which you have embraced technology and you have moved forward. I think technology is an aspect of society that blurs adjectives, blurs concepts. The issue of advanced economy versus emerging market in this field blurs. And I think what we have seen here in Asia is precisely, if you embrace technology in an efficient way, you can leapfrog dramatically. And I can say that in many Asian countries, there are technological solutions to payments, to different financial practices that are ahead of what you see in other advanced economies.
Can I ask you a bit about systemic risk? I mean, in a sense, you sound like you're quite enthusiastic about innovation in this area, playing to a gallery. But we've been here before the financial crisis. We got very enthused about financial innovation, and the end result of it turned out to be a big mess. I mean, to what extent are there systemic risks that you are worried about at the moment in the fintech space?
Well, I think precisely something that is needed is official involvement in this in a more definite way. We need to have a very close dialogue with society, with people like the one that is represented here today. And this is a good moment for me to introduce a concept that we're developing, which is the BIS Innovation Hubs. Basically, we'll be establishing innovation centers in different parts of the world. The first one outside the footprint of the BIS, which is Basel and Hong Kong, is here in Singapore. And why are we focusing here in Singapore? Because we see such a thriving effort, such a thriving entrepreneurs and thinkers where they can push the boundaries of what technology can do and what they can bring to financial aspects. Now, we need to be close to those efforts so that we can digest them, incorporate in our way of doing business, and in a safe way bring to society this innovation. I mean, financial services are regulated because we're dealing with other people's money. And we need, the prime issue there is to preserve security. I mean, for example, when you send a chat from in one system, let's say I sent you some form of message. Yep. If it doesn't arrive adequately, it doesn't happen anything. But if I send you a payment and you don't get the very last cent, you certainly will be upset and will complain to me. So we need to ensure that that is done in a safe way and there is no room for mistake there.
And so one of the things, the new center that you're launching today is you're looking at subtech, supervisory technology. I mean, one of the challenges in fintech is you're moving from a world that has a very few large banks to one that is much more diverse. Lots of little companies doing lots of little things that the banks used to do. I mean, how do you cope with that? And I'm thinking in particular here about things like cyber risk amongst these small companies that have to now be regulated in the same way that you regulated banks.
A tendency that we're seeing is that commercial banks enter into partnerships or absorbing more activity from fintechs. And that certainly is very, very good. Now, the issue is that in the past, we used to have some form of surveillance about the resilience in cybersecurity and other aspects just by looking at the banks. But now the boundary is far bigger because now there are third-party providers. If the third-party providers do not have the same standard of security, then, you know, the chain is as strong as its weakest link. So we don't want to incur in risks by having weak links. So yes, that imposes a much higher bar for authorities to making absolutely sure that the system is resilient and is secure at all times.
So we only have a couple of minutes left. Can I circle back to the issue of systemic risk? So you talked about the center, but in a sense what I was driving at is across the piece, from payments at the top end to wholesale banking at the bottom, which are the systemic risks that you're most worried about as the fintech revolution progresses? I mean, where do central banks and in a sense the BIS where do you have to put your efforts?
Well, I mean, I think systemic risks from the point of view of inappropriate loans being granted in a massive scale and that putting the financial system at risk from a sustainability point of view, at this stage I see that as a relatively low risk. I think what is most important are operational risks. I mean, something that is extremely sensible from a society point of view, we need reliable payment systems. And that can be a really major problem. Now, that has more operational type of risks than definitely the type of risks that, for example, we were exposed to for the global financial crisis. So it's different types of risks, and therefore we have to adjust our focus of how to approach this issue to guarantee a safe financial environment.
And in our final 30 seconds, tell me the one thing that you're most excited about in this area. As you used to be a central bank governor, you're now in charge of the body that regulates central banks. What is it that you think is the most revolutionary technology in this area?
Well, I think technology really what does is that it gives us a wider degrees of freedom to do our work better. What we need to do as authorities is to provide a trustworthy currency that provides an environment where financial activity can be conducted in a safe way for society's benefit. Sometimes technological developments, innovation might be hindered for security issues. But now with technology, I think technology provides us a very good instrument to allow precisely for innovation to move faster and in a more aggressive way without us worrying so much. So I think that this enhances the possibility of having more efficient and exciting payment systems, exciting financial practices, to have financial practices that cover a broader sectors of population. So this will help us to do our work in a much better way.
Very good. Augustine, one of the rules in Singapore is do not keep the Deputy Prime Minister waiting. So our time here is up. Many thanks to the audience for listening. Thank you very much for your concise answers, and thank you all for coming.
Thank you, James.